Good morning, this is Bob from Trade Genius. It's the 10th of December, and I'm just kind of pondering the market here a little bit. This last move higher has been nothing short of amazing, and we're up almost 15% from the low from here, and we're up from this February low or this January low. We're up over 27%. And I'm flipping through stock twits this morning and just trying to see the sentiment, and there's no bear left. And so now everybody's talking about we're coming out of the great multi-year consolidation, and up we go. And I'm just trying to get some perspective here looking at the market, and so this blue line here is our moving average of average volume, and this is an envelope channel for it, and we're 5% over the volume weighted moving average. And I can only go back a year and a half, but we've had a couple touches or a couple breaks of the of that price range or volume range, and it's always brought it back to the VWAP. Now, having said that, I was wrong this week. I was definitely looking for a retrace, and I was looking for the explosion next week, and so it caught me a little bit goofy footed, and now I have to assume that this market is trying to find a top, and I'm trying to figure out where that could be. And the only thing I really can look at is what the algorithms might be thinking. And if you look at the stock yield bond yield ratio, the Sharp index, the CAPE index from Case Shiller says that we're at a 28, which only 3 times that has happened before we've had a major multi-year market drops. 29, 2000, and 2008. And if you invert that to get a yield, that's 3.5%. And you compare that against the 10-year, I think it finished at 3.28%. Is that, hey, there's potential maybe another 8% move. And then I went ahead and I looked at the yen, and if I scale out to the end of the year, we have the move here. If we go down to here, this is another 8 to 10% down on the yen. So I guess if they're trying to crash this yen to get back to the near-term lows for the currency, is that I guess the stock market still could have another 8 to 10% in it, which is just amazing to me. And but mathematicians are in charge, and so those things are relentless and remorseful, and they're shooting for a goal. So until they start getting selling volume, I guess we're gonna see that. And if you look at this move right here, let me zoom in on it, is there's a French mathematician called Sornet, and he calls these Sornet moves. So we have it where you have starting to get an increasing angle of ascent, and then it just burns itself out. It becomes an infinity move, and then it just collapses. Now, normally these moves get sold all the way back to the beginning. And then there's another move that I guess Chris Kimball uses a lot, that calls it the Eiffel Tower effect. So, at this point right now, I tried to pick a top and got burned, and some of my people who subscribe to me are just like saying, hey, it's just a fool's errand at this point. And I probably now have to agree with them, and I'm just gonna have to wait for a faltering. And we have precedence with this, I guess. Let me go to the silver market. and go back to 2011 when I was hearing all the same stuff. And we were long this, and we did get a warning. And so we had to move, if you could see it. Let me go right here. So we had this move in I think it was 2010, 2011. Yeah. So we had this move where it just started going just parabolic, just grind higher. And then we had this move, and then we had another move here. And so, we may be faced that with the stock market too. I don't know. We had a move. We've had a little bit of a retrace, but nothing much. And then we had the blow off. So I have to be open to the possibility that they just might be blowing the doors off of this thing, and I'm just gonna have to wait. And this could be a bull trap right here, and then you had a doji week, and then this was like that Sunday night massacre where it gave back 1, 2, 3, 4, 5, 6 weeks worth of gains, and this was basically overnight, by the way. And I think this is what's going to happen to us in the market. It's going to be an overnight move, and so you're almost forced to take some protection if you're long, or just kind of add some positions and roll them, because I don't think there's many weeks left in this move. I mean, here it is. We had a move up, retrace, and move up, retrace, and move up. And so I think we probably are at the blow off stage now, and we're probably looking at maybe 240 as a top here before the end of the year. And I think that would definitely be a place to just to hang some shorts. But I'm going ahead and buying. I already have the VX contract, and so I'm sitting on that. I'm going to day trade the short volatility if it presents opportunities for me, and I've been slowly just getting out of everything. And the only thing I'm really holding short, that, and it's causing me a little bit of pain right now, is that I don't believe the oil move. Oil should be moving with the stock market here if things are truly getting better, and I don't think they are. But I just think the oil servicing, the oil market, we've had rig count increases now for like 6 weeks in a row, and I think that's just going to be the seeds of its own demise for oil prices and for the producers. And if you look at the contango on oil now, it's basically the curve is flat looking out a year, and I don't know how people are going to make money speculating in oil. And most of the oil, I think it's way overcovered between the speculators and the actual producers delivering. And I just think I think those guys are going to have to go away. The price of oil is going to have to come down. You need to look a year out. It needs to be between $5 and $10, depending on how you're storing the oil to make money. And so anyway, these are kind of my thoughts on it. I'm just kind of wait and see now. I don't understand the moves, so I'm just going to kind of sit back and let this week kind of play out, and just hold on to a couple things short, some SPY puts, some VX, and day trade long until this fever breaks. And I think it's going to break overnight. We're going to just get a Sunday night massacre, and kind of like what the first week of January looked like last year, because I don't think it's sustainable against GDP, against bonds. The other thing is SPY. The yield on SPY, we have a dividend this week, so maybe that's going to cause some pain going into next week. It's a 2% dividend, and so once people capture that dividend, they may walk away. I don't know. I think the central banks. I know the Swiss and the Japanese are buying ETFs, And so I guess, when you have free money and you can get a 2% yield on it, I guess you do it all day long, and that's what they're doing. And I guess the only way it's going to break is when it causes them pain in the real economy by their currencies just costing too much for their people to live. I mean, if you look at Japan, it's down. I mean, their currencies are down 15%. I mean, their food prices, if they have to buy grains, they're paying 18% on that grain, and call it 9% if they're buying it from the Eurozone, right? And if you and oil, the price of oil for them is up 15%. Remember, oil is sold in dollars, and so I don't know how their economy survives that. If we had to pay 15% more for our energy, the ripple across the economy would be devastating. It's just like a huge tax on every American. Well, every Japanese now is getting taxed because the Japanese government's trying to protect certain export industries. It's going to be interesting to see if it holds. Anyways, Bob from Trade Genius. Hope you guys have a great day. I'll be talking about a few more things this weekend, so look for your feedback. If you have any comments, I'll be happy to answer them. Thanks. Bye.